So many of you guys know what the CPI report is, but do you truly understand the background of what CPI is? Now, it's important to understand the fundamentals of what the CPI report is so that when you look at those numbers before you trade, you can trade with confidence. You can use the CPI report with Forex, with stocks, with indices, with ETFs, anything that you trade, because the CPI report affects the economy. I'm going to explain to you why the CPI report affects the economy, what it is, and how to find the report and what to do when you're trading it. Let's get into it. So what is the CPI report and what does CPI stand for? Well, CPI stands for Consumer Price Index. The goal for CPI report is to attempt to measure inflation and deflation in a particular economy. All of the major economies report the inflation area numbers of their economy in an attempt to combat a growing economy or an economy that is slowing down. The CPI is what is used to measure these average changes in prices over time that consumers pay for goods and services. Now, essentially, the index attempts to quantify the aggregate price level in an economy and thus measure the purchasing power of a country's unit of currency. The weighted average of the price of goods and services that approximates an individual consumption patterns is used to calculate the CPI. So this is the Australia 2021 CPI mid-year. So if you look at the housing to the left, all the way to the right where it talks about communication at 2%, this is comparing from their last quarter CPI report. So housing has gone up 23% from their last quarterly report. Food and non-alcoholic beverages went up 16%, and so on and so forth. So this is highly important in regards to interest rates, which can affect the Forex market and even the stock markets and the other markets around the world. But we're not going to go into this, how to calculate the CPI. However, I just want to let you know how this can affect your trading and how we can look into this before we start our trading day. So why is this important to me as a Forex trader? Well, CPI is used to make changes to cash flow mechanisms such as pensions, Medicare, cost of living. And if these mechanisms are affected, this means that the currency is affected in that country. This versatility means that it affects nearly every market and person in that country. So the CPI dictates on a large scale what monetary policymakers and the federal government are going to do for our interest rates. For example, when COVID-19 hit the economies of the world, the goal for a country is that their currency and other markets do not collapse. Well, how can it collapse? Since many people are getting laid off of their jobs, this means money isn't moving as frequent as it would in a healthy economy. Therefore, the healthy governments were able to provide their citizens with financial relief so that money can continue to flow. Banks lowered their lending interest rates to practically zero, which brought in a consistency of borrowers to the lending table. Now, imagine if the interest rates stayed the same prior to the pandemic. More than average citizens would not borrow. Imagine if the country didn't provide financial aid. More than average citizens would not have money to buy, which will dip the economy drastically, right? Although the economy still dipped, if not for these aids, the economy would have crashed, which would have resulted in that country's currency becoming insignificant. And if a country's currency is insignificant, then they become the bottom of the food chain throughout the world, having them to rely on the stronger countries for aid. So guys, every company has their own website to review their CPI report. I like to use a couple of sites I'm going to show you, whether if you're trading the Forex market, the stock market, indices, ETFs, whatever you're trading, CPI is going to affect your trading. And if you're unaware that the CPI report is coming out, you just may find yourself on the opposite end of the trade. So let's go ahead and take a look at these sites. All right, so the first site I like to look at is forexfactory.com. Now, even if you trade stocks, you can still look at forexfactory.com to find the CPI report because it affects every market, as I mentioned. So when you go to forexfactory.com, you're going to see a list of currencies like this here. You'll see red folders, you'll see orange folders, you may see even yellow folders. Now, what I like to do is filter out my folders and only focus on the red, which is the high impact news, and then orange, which is the medium impact news. You can click or unclick the yellow, which is low impact news, and then you can even unclick the gray one, which is non-economic. So I only like to focus on the high and medium impact news. That is this green filter area right here. Once you do that, you'll see your CPI. So whenever it comes out at once a quarter. CPI right here, you'll see MM, which means month to month, and then YY, which means year to year. And we can see today April 10th of this recording, it came out as higher than it was forecast. So you want to read it from right to left. So the previous CPI report, which was month to month, came out as 0.4%. The forecast was 0.3%. So experts forecasted it will come out lower than it did previously, but it came out actually higher. That's why it's green instead of red. And when that happens, we can expect the United States dollar to gain strength. Now, if you're trading stocks, especially American stocks like Apple, for example, this may affect the stock in going up higher. So it also depends on which stock you're trading as well. We can see the same for the year to year. Last year came in at 3.2%. They forecasted it coming out higher at 3.4%, but it actually came out higher than what they forecasted. That's why it's green. So what you can do is click on the folder right here where it says detail. When you click on it, it will tell you what it measures. It says change in price of goods and services purchased by consumers. That's what it measures here. Actual greater than forecast is good for the currency or for your stock. Typically your stock, your American stock or whatever stock you're trading, you want to be sure you look into that. The frequency is released monthly about 16 days after the month ends. And then it will even tell you the next month release. Now, here's the sources, and this is what I love to click on here, where it says source is the Bureau of Labor Statistics. This is for the United States. So when you click on it, it will take you to the Bureau of Labor Statistics. It will give you the CPI information and a whole bunch of information here, which is absolutely great. Now, if you're looking at a CPI for another currency, like let's say the Chinese yuan here, we can see the CPI is coming out later on this evening, 6:30 p.m. local time. If you click on it and you click the source here, it says National Bureau of Statistics of China. That's the website that they have their statistics for the CPI and much more. So as it comes up, it will take you to their website, National Bureau of Statistics in China, and you can read all about it if you're interested in that. So that's why I like Forex Factory, because if you're trading Forex or stocks, you can still use this and find out a ton of information how it can help you. So let's read this here for the Chinese yuan. We can see that if you're trading a stock, a Chinese stock, for example, you can see the previous was at 0.7%. The experts are forecasting at 0.4%. Now, the actual may be higher. Now, if it's higher than 0.4%, if you're trading a Chinese stock, more likely it may rise. If you're trading the Chinese currency, this may rise as well because the currency will gain value. So that's pretty much it, guys. I like to use this Forex even if I'm trading stocks. Another site that you can actually look at is the tradingeconomics.com/calendar. Now, this will provide you everything. So this is the same date, April 10th. And if you look, you'll see the flags here and you'll see the country next to it here. So all I'm doing is scrolling down to CPI. It happens to come out the same day. This is the exact same reflection here, except you can use this for anything. It's not specific to currencies. And the CPI, you can see that previous, I'm looking at this at the top, previous, it came in at 310.33. Actual, it came in at 312.33. So it came in higher. So if I go back here, it's reflecting the exact same numbers here, the exact same thing, except this one probably will give a little bit more detail. Now, remember, this comes out month to month and then also annually as well. So you want to just keep an eye out on this. One thing that I like about the Forex one here, you can actually go out and go to the next day, click over here, and you can continue to look to the next day. So you want to be careful, guys, when the CPI report comes out. This is fundamental trading, and not just CPI, other news that are important to a currency or even to a stock in this case. So there are three takeaways that I want you to take here when it comes to CPI report. So the first thing we need to remember is that CPI stands for Consumer Price Index. The second thing is that the CPI report shows me the inflation and deflation of the economy's goods and services in which it is compared from the last report. And then lastly, check forexfactory.com or tradingeconomics.com/calendar for high impact news and medium impact news for CPI reports so that you can trade appropriately during the time of the news release. All right, guys. So hopefully you guys have a new foundation of what the CPI report is, so that when you look at these websites, you're not going in blindly, but now you understand the fundamentals and the foundation of what CPI is, and you can speak to somebody else about it confidently. All right, guys, I'll see you in the next video. God bless you.